Today we're talking about the Phoenix real estate market and special Labor Day shout out to you all. I hope you are taking it easy today, sitting in your backyard, sipping on some beautiful drinks and enjoying time with your family. Now, welcome to my channel, Escape to Arizona. My name is Ryan Meeks. I'm a Phoenix real estate agent, and I have my pulse on the market right here every Monday. So this video is about 8 to 10 minutes long, and I'm going to go through everything that's happened in the last week. Now, there are chapters below. If you're watching this on YouTube, you can go ahead and skip around. You can come back to anything that's of interest, or you can skip the parts that you don't like. It's okay. I won't be offended. And to hear this every Monday, make sure you hit the subscribe button, hit the little notification bell. Let's get started with the rates and current market conditions that are affecting rates. I created a video last week, and in that market update, just telling you guys about the rate hikes that are more than likely going to be happening here at the end of September. And just to give a brief recap, the Fed will be meeting on September 20th and 21st to finalize the rate hikes, but they have said at a minimum they expect to raise the Fed funds rate by 50 basis points. So we won't know exactly what they're going to be doing, but that is what we expect, a 50 basis point hike. However, there are other things that are happening with inflation that could increase that hike, and we'll just have to keep our eye on that number. And that number specifically comes out September 13, the inflation numbers. But we did see that month over month, inflation was unchanged. Now, there's very little chance that we see inflation stagnate once again. Stagnate means just stay the same, by the way. On Monday, OPEC decided to cut production of oil 100,000 barrels per day. And with that, crude prices jumped 3% on the news. And with oil down about 30% from its highs in June, OPEC, you can expect, is going to be cutting production as they brace for an economic slowdown as well. Now, this is the biggest piece of news I could find that's going to play into mortgage rates this week. Nationally, we're hovering around 5.65% for the 30-year. And with the rate hikes this month, it's very likely that we could see even above 6%, possibly even 7% before the end of the year. But it's still early. There's a lot of time left in the year for this to play out, so we'll have to see. Now, getting into the Phoenix, Arizona housing market, August was a pleasant relief for sellers and property owners here after the June and July supply increases that we saw, which were just insane compared to what they've been. And the market in August is still favored by buyers, but if we're looking at the rate that it changed as far as the rate of change, that dropped significantly in August, and had it continued at the rate that June and July had been going with homes being listed, so the rate of change has come down on homes being listed, we would have seen around 30 to 35,000 active listings, and even the prices of homes drop even more than they have in the past few months. So instead, we're seeing this active listing number hover between 19 and 20,000, even going below 19,000. So that's been happening pretty much all the month of August. Now that August is over, let's take a look back on August, compare that with last year. Because that's what we do. We compare things with last year, even though they're totally different. But we're going to go ahead and do that. So there were 7,419 closings in August with a median price of $466,900. And that includes both new and resale figures. Now, compared with 2021, the unit count is down about 32%, and the median price is only up 13.5%. And what's interesting is that of these 7,419 closings total, 1,635 of them were new builds, and that count is up 7.6%, and the median sale price is up 22% in that category of new sales. In terms of resales, 5,784 closed in August with a median price of $450,000, and this is down a massive 38%, and the median price is only up 10%. So down 38% on the amount, up 10% in price. Now, obviously, new homes were signed under much more favorable conditions here, right? So how much have we dropped in price in the Phoenix metro area, and where was the peak? I think that's a question that is on everybody's mind. Well, stick around to the end. I'll break that down for you. But breaking down the numbers right now, active listings grew in August, but only by 4%, as opposed to the 25% that we saw in July. So that's where we're getting our slowdown right there I was explaining a little bit earlier. Obviously, the more homes on the market, the more competition, the more price decreases if there's not the demand to purchase those homes. Now, it's not because homes are going under contract that we're seeing less listings. It's simply because there's less homes being listed. Also, we saw demand tick up slightly in August after seeing demand fall quite a bit in June and July. And we're able to see this with the number of sales and the number of pending or under contract listings that we look at. September might even bring lower prices, however, and you're probably asking why. Well, let me tell you. Opendoor, and if you're not familiar with Opendoor, they buy homes in a seller's market. They hold them for 2 months after paying over what they're worth. And you guessed it, they turn around and sell it for a profit. Now, that's not happening right now because Opendoor has amassed about 2,700 to 2,800 homes in its inventory. And as you can see, they made some really bad purchases back in May. And for some reason, they are still purchasing and just overall, in my opinion, making really bad choices by overpaying and then selling for a loss. Since Opendoor has slashed their prices, the number of listings under contract has jumped from 137 at the beginning of August to 477 at the beginning of September. So 137 under contract beginning of August. Now we're at 477. Now this is putting a lot of pressure on sellers competing with Opendoor. The way Opendoor works, and what I've seen in the last 2 years, is that they would overpay for homes. And for us as realtors, if we had buyers, the protection that they had is that when they went in to purchase a house, if Opendoor had overpaid for a home and my buyer was going in a neighborhood to purchase a home, we could use that as a comp. And that's really, I think, had a huge effect on prices going up here in the Phoenix metro area. I mean, they were paying sometimes like $50,000 more on a $400,000 home than they should have. OfferPad was doing it too. But that really drove the prices up. And now they're stuck in a position where they can't overpay, wait 2 months for appreciation, and sell it for a small profit. Now they're really getting bit in the butt. Now with 2,800 homes, this is definitely going to lead us into an even lower average sales price, median sales price, whatever sales price you want to look at in September once all of these contracts closed. And this can kind of be compared to the foreclosure wave that we saw back in, those days. And banks own property, they just had to dump it and they drove down prices. Now, don't worry about that because that's not the case. Banks don't currently own properties like iBuyers do, Opendoor, OfferPad. So get that out of your mind. That's not happening. Unless everybody loses their job and can't pay their mortgage. Now, just like it helped inflate prices, I think it's going to help drive the prices down too. Now, OfferPad is the second largest buyer behind Opendoor here in the Phoenix metro area. It doesn't seem like they're following the same path as they are buying and selling on a much smaller scale. They only have 42 homes under contract at the start of September, which is roughly the same as they had in August. Now, institutional investors are also losing their enthusiasm, and their purchases in Maricopa County dropped from 579 in July to 307 in August. This means basically they've halved their market share from 8% to 4%. And if you're not familiar with what an institutional investor is, no worries. It's someone that invests money like a hedge fund or a mutual fund on behalf of other people. And they are cash buyers. And yes, they are purchasing homes here as well. I get their emails all the time. We'll purchase homes cash. And they tend to actually pay a little bit more than the market is worth, because they're going to be holding these properties. In August, the biggest winners were home builders. More than 1 in 5 homes purchased was brand new, and the highest market share for new builds since March of 2008. Ominously, we've seen a large rise in rates over the past week, and if they stay at this level, demand is likely to fade again quite quickly. Another factor in demand is coming from investors looking to buy and rent or fix and flip. And what we're seeing with the latest data, it shows a marked reduction in purchases by these buyers as well. Demand is weak across the board, but supply is not growing like it did when demand started to falter back in 2005. The period of rapid supply growth appears to have ended in early August. Overall, August wasn't too bad. It might just be a temporary uptick in demand, which could easily fade. I really think that the slowdown in supply could have more of a long-lasting effect, but we'll just have to wait and see what happens here in the Phoenix metro market.